Hello again, I'm Rob Smith with the Quant 4-week coaching program, week 3 on broadening formations, the third video. It's again Rob Smith at the end of the black, Quant VTF here at T3 Live. And as we move on our journey of understanding all this stuff, once again, very important if you're having trouble grasping the original two before broadening formations, go back and watch those videos. Right? Those should be very clear. Time frame continuity levels should be very clear. Actionable signals should be very clear. And as we move on with the broadening formations, it gets a little more challenging. So not only go back and watch those, as you're watching this series, this broadening formations, the third week series, if you are unclear about any of these concepts, make sure you write that down. Make sure when we have our meetings this week, you are prepared to ask the questions of what you don't understand. Because I understand that as we get all three together, it gets a little more complex. But just like with a trading plan, be prepared with your learning plan. So when you come to me and we talk about these things next Wednesday and Friday, be prepared with all this stuff, right? We've gone through the proof of broadening formations and as well how to identify them, right? By outside bars, using the actionable signals with the broadening formations, how they become support and resistance, and all this stuff we're going to get to again here. Then adding the time frame continuity with the broadening formations, combining those outside bars with actionable signals because that shows us it's an actionable signal and a broadening formation. Using the broadening formations to time actionable signals as those internal triangles break out, right? And then we finished off with drawing them, and we're going to continue on that now because there's ways to make it more clear, and that's what we want. We want clarity. We want to be able to quantify things, and we want to be able to identify them swiftly and cleanly. So let's go back to where we were. Just a slight review here, section 7 on drawing these things. All right. Because remember, those physical lines are only visual representations, right? Are subject to change anytime we have a change in time frame continuity or price achieves any higher high, lower low, right? So any exhaustion risk of time frame continuity and the actionable signals, we want to know about that. All right. So once again, in the target, that outside bar formed here, so we know it's fractal triangle. If we go down to the weekly, we're going to see that fractal triangle. Higher high, lower low, lower low, higher high, lower low, higher high. Then it went inside week here and then fell apart. All right? So if we draw off any series of higher highs or lower lows, you may draw like this. All right? However, since an actionable signal doesn't form until the time period of the bar is complete, remember, something's either forming an inside bar, but once it closes, then it is. We want to draw the triangles after the change in time frame continuity. So a new 60, a new day, a new week. Once it closes out is when you can start drawing them. All right. So before this broke through here, you could come off these lows here and these highs here, and then it breaks through. And remember, they become resistance. So in this case, this triangle is now resistance against that. However, if you wait until the next bar, these close out, you'll also notice these are lower lows of here, like so. So it's still being cased in this. The higher high, the lower low, the higher high, and the lower low. In this case, it would be on support, trying to break in through here. It's for this reason that you can drive yourself nuts in drawing billions of triangles. That's why we need to time them all together. Right? It may be support, it may be resistance, but it's going to line up, if it is, with the other two universal truths. All right? So the drawing of triangles only helps us to visualize the range expansion. Right? Just a visual way to help us. But once again, it's much more important to look for a time frame change continuity combined with actionable signal that reclaims that previous range. Right? I can't stress this point enough. If you try and do one part of the universal truths, one part only, you'll fail. All three of these matter. Everything has to line up together. All right? So there are ways that we can draw things that will help you visualize better than drawing the actual triangles themselves. So, therefore, the lines can be drawn as seen here to represent those reclaim levels, right? So horizontal levels are not support and resistance, right, in the classic technical sense. They're levels of reclaim. So this is a very key point why people fail trying to use support and resistance. Classic technician would be looking at this as a breakout, right? The thing we also know about the broadening formation is it turns the best looking chart to the layperson into the worst looking chart on our terms. That's a good thing. What do I mean about that? Anybody who was drawing this line or using this as a so-called pivot, at this point when this green bar closed out, nobody in the world would say the chart looks bad. They would say it is a successful breakout here of that. However, we know we can either trade that continuation. However, we prefer to go inside and drop in because at that point it's a failed breakout. And then we can look to go all the way down and take the other side. So we can draw these off the old highs and lows, like in here. So conversely, at this point, it looks awful. It's on the lows. However, if we get back up into here, that's something we're going to want to know about. Reclaim levels. All right? Since by definition, the range of broadening formations expand over time, we can look to the higher time frames to reveal the major reclaim levels, the big things. All right? All right, and that's when we saw that SPX. All right? When you get the triangles here, and it's a little tough to see in here, but this was that most recent one with the 2008 crisis. Once come back here, you'll see a slight level here. Once it reclaimed that, we get back into here. Once we can identify these reclaim levels, reclaim back to the downside, reclaim back to the upside, we can visualize the broadening formation in its larger sense. And then anytime we have full time frame continuity to the other side, we know to go with it because we know that they will broaden over time, right? So we can match that up, right? We can see the setups racing towards the other side of the range. Most people won't take these trades because as the range extends, their perception is that they are chasing. We know that the range is expanding and to go after things when they are doing this. So if we look at a monthly chart of Google, and I'll go into this in just a little bit more detail in a few minutes. The monthly chart of Google, there's a massive outside month range, 128 points, followed by a multiple inside bar pattern, then range extension that finally range reclaimed. Here, this bar was 128 points wide. People ask me about Google for months after that. I'm like, you got to get out of there, right? Because of those multiple inside patterns. So what did it do? It went inside. It went outside. Here. It went inside. But then here, once it finally broke that bar, that's something we wanted to know about because then it reclaimed it. And you can see the lows of all these openings and closes here. Boom. Here was our reclaim. Eventually came back and took both sides of this 128 bar out in triangle fashion. So if we look at a weekly chart, and I'll go to this again in a second because we want to clean it up for you. Not only can we go after those reclaim levels of highs and lows, right? We want to go after the reclaim levels of outside bars because we know they're fractal triangles, right? And so at this point, this was an outside bar. We can draw horizontally because that tells us we're getting back into that. Right there. That's exactly what we want to do right there. This upper line here reclaimed this outside bar. So the importance of that is that most people, when they learn about the triangles, are trying to time them from the exact low of the triangle or from the exact high. We don't have to do that because we know that the range is expanding. We want to look for the setup to go back the other way. We don't have to get the exact point. We want to get out if we're on the wrong side during that, but we don't have to enter at the exact bottom of a triangle or the exact top. We don't have to do that because if it's right, if the triangle is true, we're going to have more reclaim levels to go after once it starts racing to the other side because we know it'll do that. And here you can see when this bar got up in here after the reclaim, it took the highs out of that outside bar, right? Took the highs of that outside bar, bam, all right? The lower lows, the higher high, the lower lows. If we reclaim this stuff, we're going back to higher highs, which indeed it did. So in summation, now that we've quantified the price action down to 3 universal truths of price action, the chart visualization should become crystal clear, right? When you see things in only these terms that we are discussing, right? You should see actionable signals. You can see the colors or black and white of time frame continuity, right? You can see outside bars, right? Once you only look in these terms, things become much more clear. So we want to identify when we're at risk for conditions to change, right? Because markets are dynamic. A lot of people will look at charts over the weekend and you'll see guys spew out. That's when the market is static and only monthlies are in force, right? We want to know when we're at risk of change. So anytime a time frame exhaust, time frame continuity risk is we're subject to time frame continuity risk. A new month, a new day, a new week, a new 60, right? We're at broadening formation risk, right? If any previous higher, low is reclaimed, right? Failed breakout. We want to know about that. On any time frame, that's going to matter, right? We can still time the longer ones with the shorter ones, but we need to know that because as you can see here, when they race to the other side is how people get slaughtered. Right? During rev strats, you have time frame continuity risk, broadening formation risk, and actionable signal failure are all subject to risk, right? That's why we want to know about these things. That's changing, right? Because by reversing that equilibrium, it's also going to in order to do that, it's going to change time frame continuity, right? In the 1 bar case, it's a 1 bar broadening formation because it's reversing also. Because it took out one side of a range and retraced into the inside bar, that's broadening formation risk, right? As well as the actionable signal failure risk because that inside bar has failed to maintain. Okay, so understanding these concepts and trying to put everything together that we've been working on, let's look at some live chats. If we go back to the IWM small cappers, once again, if we go back on that triangle, that was that actual signal, inside day going to the highs. Once again, if we go back to that longer term stuff, the weekly, we can see the triangle like this. Very clear. Right, here's your highs, here's your lows. Right, we talked about the reclaim down here. Now at this point, when it went kicking pattern on the weekly, right, people aren't used to things moving like this. Right? We're totally good with that because we know it's kicking pattern weekly, reclaiming all these levels here. Right? You'll notice here, not only to reclaim the levels, once again, let's draw them. To help you look at them, you can go reclaim of the outside bar there. This was an outside bar. Kicking reclaim at the same time. All right. This one here, 1, 2, 3, all these things getting taken out. This was an outside bar. Pow, pow, pow. How is this thing so strong? This is why. So when it comes up into here, what can we expect it to do? We can expect it to go to new highs. So if we go back and then we look at where the old high was, here. Once we start ripping through this stuff, we got a pretty good idea this thing's going to take this out, right? Because this broadening formation is going to broaden, right? So when people thought, oh, it's way overbought, this thing's taking out the highs almost for sure, right? at that point. And we're still going to use what we know to be true, actionable signals. And anytime that thing has full time frame continuity to the upside, we want to be involved because we're pretty certain that's going through there. If we go back, if we go back to that weekly, like so, or the daily, this is an old triangle here. Once again, remember we talked about this actionable signal here. Now, as time moves away from them and up into here, right, it can be breached a little bit. What's going on in here? We know we're up into this neighborhood of this thing here. Potentially, we've got the lower lows here. This area becomes very important. Right? We're going to use the old triangle as support, as well as the bottom of the new one, the top of the old one, the bottom of the new one. And so what we would look for here is actionable signal with full time frame continuity to the upside if it's going to break out. As of right now, it's an inside month. Potential combination with an inside week. So we'll be watching that this week to see if we can take out all of this stuff here and go into new highs. Now, once again, we will be exhaustion risk should we do that. But so long as we're above that monthly, we would be inside month and up. And if it happens this week, you're also inside week and up. So we're going to be paying attention to that. If we go to Google again, in the Google, you see all this stuff like here, right? And if you look back here, fractal triangle here, all right? Tries to go range expansion up into there. But if we go back to that bigger chart that we were talking about this outside bar, all right, and then the lower low off of here, once again, we're going to look for combinations. What would cause this reclaim on the monthly? Weekly takes them out and comes back up, forms a hammer. Didn't go immediately. We had to go after that outside bar again, right? I'm sorry, if we go back further, it's further on that one. My bad. Sometimes charts are just too big. So we got that slight lower low. It took out that big monthly bar. All right. All these reclaims of all these outside bars. And if we go to the daily, you're going to see this. When that occurred, and see, this is what happens when you draw too many triangles, right? So we can get rid of all that, like so. What occurred is formed the daily hammers. Hammer, hammer, inside hammer. And so when you had this inside hammer right here, 710, and go back to those weeklies. 710 is all up into here. Reclaim, reclaim, reclaim. The monthly opening that month and that July. Here, and then as we go into July, the monthly opening was 705. Right? So we reclaimed all that stuff with those actionable signals going full time frame continuity back to the upside. That's when we can start looking for things to race to the other side. Right? So if we look at Etna, so Etna, you're going to see this. Here's your monthly. Here's your fractal triangle there. All right. If we go to the weekly, see the lower low, the outside week, fractal triangle. Boom, we wanted to reclaim that. Did here. Off to the races, right? Triggered by the inside day. All right, so we always want to be aware of all this kind of stuff. If we go to Jack in the Box, This is very similar to the Google. Big outside bar here. That's something we want to know about. Then, outside month, reclaim. Outside month here, never broke. So what happened here? We had this internal triangle in here, right, that then came back down, said slight higher high, slight lower low, couldn't make the higher high. The outside bar, additional triangle here, which never gets broken, but this was below that, got outside of this, right? So this was the reclaim level that it sat right on. What did it do to reclaim? It went inside month. Boom, takes everybody out. At this point, you can see this triangle like that. Used it as support. And then anytime right here, when we had full time frame continuity to the upside, we know where it's going. It's taking that out. All right? Really nice move for Jack in the Box. If we go back to that example of CTXS, so when I made the video, it had come back already up into here. We talked about the inside, outside, inside, explosion to the downside. All right. So if we go back and look at that 60-minute, see how powerful that was. Goes down, gets killed, makes the lower low, comes back up all the way through and takes the whole range out. It broadened again. So when would you know that that would potentially happen? The outside bar of the inside, outside, inside. Reclaim. Here. Now we're looking to take that out back to the upside, which it did. All right. If we go back to some momentum combinations, if you look at this KEM Kemet, you can see a bunch of things on the weekly. First of all, you're going to see the Rev Strat here. Inside bar countered with hammer right there. You're also going to see this outside week. There's another momentum hammer coming up, another momentum hammer coming up. Remember, when you go through the charts, you want to be able to see these things very clearly. So when we have this outside week, first of all, we go to the month, and what do we know about the month? The month is momentum hammer, if it takes that out. So momentum hammer, potential triangle expansion off the outside week. If you go to the day, see this higher high, lower low, back up, all right, slight outside bar, and here's your combination. Momentum daily hammer, expands the outside week, reconfirming the monthly momentum hammer to the upside. If we go to ACIA from last week, what did we know to be true? The monthly opening was 59.61. The weekly opening, all right, was 60.67. With the Rev Strat week going in force, let's draw that so you can see it. Shrink it down even more. With the Rev Strat week going in force, below 60.55. Right? Inside bar counting with shooting star. So anytime the daily is red, going below that, what do we see? Inside bar opens here for the potential 1 bar Rev Strat down, bearish engulfing day, Rev Strat Rev Strat week, full time frame continuity to the downside. If we go to the 60, when this occurred, within this tight range, we had an outside bar with the high being 58.86. So when this opened here and started coming through all this, it's also 1 bar rev strat 60, reclaim of the triangle, rev strat downside, full throttle downside. Every reason to believe that's going to work, right? You can also see the outside bar calling the top continues to expand. All right. This is very clear on the ACIA, this triangle. When I talk about the triangles needing to grow and people having a tough time chasing after they are already growing, starts off in here and eventually took both sides out all the way. And that's why we can look for those macro triangles, those big ones, right? Those big outside bars on the monthlies. That tells us where the real big moves are going to occur. So at this point, we'll conclude week 3 video series on broadening formations. And I understand that at this point, this is going to be the most difficult part. However, when you grasp the first 2, it becomes much easier to see this stuff. First of all, we always want to know, what are we going to create if something works? Is a weekly going to change the monthly? Is it going to turn into a monthly signal? Are things going to rev strat something? Do we have time frame continuity at all times, and when are we at those risks? And then as you start to look at how these formations are setting up to try and test one side of the range, test the other, and when they occur. So this week is only a few days into the month, and we have inside weeks. Either side of these inside weeks will trigger the monthly to go that direction outside of a gap and reverse. All right. So this week will be a very interesting week to discuss this as we're going through it. So once again, it's very important to have a full grasp on the first 2, the time frame of continuity and the actionable signals, very firm. And then as you understand that, looking for these reclaims, looking for where you are, because once you can use the broadening formations, you're not always trading momentum by always going directly into new highs or new lows, because we can look for these reclaims, and when you get them, you get the bigger moves. Here, failed all these guys, outside bar expansions, coming off and then reclaiming again. This is how price action works: back and forth, back and forth, back and forth. And as you see these more and more, things will become crystal clear on what is happening. Are the triangles contracting by forming an inside bar? And as they do, is there an internal triangle that's trying to grow? And when it does, close out those longer term signals and then use the triangle to trigger them with full time frame continuity. All right, I will see you on Wednesday and Friday. I'm Rob Smithy in the Black Quant Edge VTF here at T3 Live with Quant Edge Coaching 4-week program, week 3, video 3.